Turnaround Tuesday, everyone. How are my trading warrior brothers and sisters doing? Everyone doing okay? So the yen keeps fighting back. Yesterday held this 108.50. This is really a key area that it keeps holding. Here's your 4 hours. So if we get back above 109, hi Brock, how are you? Maybe there's a shot for a new high. Uh, Coming into this week, I was considering a short in the Swiss back up here at 99.20. I may still do it. I still think the dollar could head lower, and the Swiss is, this could just be some type of ABC here at 99.20. Haven't pulled the trigger, and was looking for a short at 1480 in the gold. Only got up to what was it, 75, and it seems like a lot of these reversals are happening most likely, like usually, in the London session. So, then you come in and the reversal's already taken place, and then you go, well, do I chase it here or still wait for a potential rally back to 1480? So B is my choice. So, really, looking at this crude now, see how we took out the upper end of this rectangle range here. And again, this was Sunday night. So by the time you came in, we were already a few candles lower. Here it worked to chase it. Okay, so we're on the verge of breaking down out of this triangle, and Steve pointed it out. I thought we'd get to 61.8. That's looking like that's coming off the table, especially if we break this, then then you have to see if it holds the uptrend, this little minor uptrend that, Steve has the same channel. And if we break down, we're on our way, I believe, back to the major potential breakdown at 51. So that looks pretty negative. My turnaround Tuesday choice, and the only new thing I did is I'm taking a shot in the S&Ps here. Did it at 31.2980. As you can see, this might just be drive two, but I've seen a lot of drive twos working lately. So, we do have divergence here on the 1 hour. We don't on the 15-minute. I do pay attention to it. So it still is possible that we try and make one more run. Saw a channel that we could get to 31.40. So I'm shorting a piece here. I'll short another piece at new highs, and my fail safe stop be about 31.46 in that range. So this is my turnaround Tuesday choice. We'll see what happens here. Uh, Anything else I really wanted to cover? Euro moving sideways, but what kind of high is this? Anyone know? And I'll give you my final view on this. See the RSI here? It's almost a 78 reading. Anyone know what kind of high that is? So compare it to this. This was 76. This was 78. Anyone know what you call it? No. It's actually a confirmed high, Stuart, because momentum confirmed this high in the euro last week. So based upon what I believe is markets rarely peak when they're confirming highs. I think another high is coming in the euro, and still a believer in this. Do I still have it up here? This wedge right here. Okay, so we've come back and tested it again. This is your line in the sand. Back under 110, you have to get out of the way. But if this wedge works out, we should see this. Wedges can retrace 100%. So still giving the dollar the benefit of the doubt to the downside, and euro's leading it today with euro up a few pips with cable down. I was looking for a possibility for a euro pound scalp, and I didn't do it down here. But as you can see on the daily, looks like two drives on the 4 hour. Look how we when they smashed it last week under the triangle. We did not confirm that low. And the 1 hour here, the 1 hour looks like Steve said not yet yesterday. This would be my reason for not yet buying it. In fact, it was my reason. Okay, so I'll ask you this now, Stuart. What kind of low is this? Anyone know? It's open to the whole crowd. So I do a little teaching here because these are things you could use the rest of your trading career. That's right. Confirm low. You get the gold star. Yes. So confirm lows usually mean to me that's not the low. It's just a low. And I would say now if they smash euro pound one more time, I don't believe we'll have a confirmed low. We won't take out this low because we've had a nice little push. So we'll see. This may have been the bottom already, but I'll err on the side of patience. And you know what? If I miss this trade, do you know what I say to myself? What's the most important word for a trader? And that's right, Scott, because you know what? There's always another bus around the corner. So don't worry about it if you miss trades. I don't know about you guys. I miss trades, multiple trades every day. Every day I miss trades. And you know what? The next day there's always another trade. So don't freak out about missing it. If it doesn't come to your setup or what you were looking for entries, let it go.
I can definitely tell you what is the most dangerous phrase for a trader.
What's that? FOMO?
This time is different.
Oh yeah. Yeah. I know. This time is different. I know. And are you hearing that now a lot?
No, no.
Regarding S&Ps and
I have to be honest, not from the majority of
yeah.
the crowd, but
You know
still,
why? They're so young, they don't have a basis of comparison.
that's true. That's true.
Could that be? I mean, like how many people have really, yeah, I mean, so many people have come into trading since 2009. I mean, we're talking 10 years. They probably don't even remember the Great Recession, which was really great to have lived through. Was it great for you? Oh, in Greece, it was great for your country.
Oh yeah, the best ever.
Yeah, so you guys, you guys had a great time too.
Yeah.
So yeah. So what do you think, Steve? Maybe a top pick here in the S&Ps, or you're going to wait for it to do something on the downside? I know Blake is up next. Maybe you want to save it for when you're on deck after Blake comes in.
Yeah.
Yeah.
Then, Blake has, very tight
Because I
schedule.
was going to have you go next, and then I could say this time is different and change the lineup. But I know Blake. There's probably some numbers coming out. Are there numbers coming out this morning around 5:30 or so?
Well, we have some Canadian numbers and building
Okay, so
permits. Yeah.
I'll stop talking so you could say what you have to say and get back to making some money, Blake.
Well, that's not happening today. It's been really quite sideways the last 2 days. Actually, I've been as I've mentioned to you before, I'm working a core dollar yen short
Yeah.
probably around these levels, because my cost average changes every day, guys. You have to understand, I have to input my cost average every day at 24 hours, it resets. So based on what I've got, I'm probably right around here. Actually, when we were down at 108.59
Yeah.
last night, I was dropping my son off at goalkeeper training, and I had to sit there in the parking lot, closed out some dollar yen short, reshorted it at like 65 before I went to bed, and it's up again, in my face. So it's I just work, just kind of a core position. I'm covered a little bit down here. I covered a little bit down here, actually on, what was that, Thursday? I think it was Thursday. And then I'm just short back rallies when it gets up into this level, but what I'm looking at is, possible triangle. And I was talking to.
Do you have the same level of conviction you had Friday and Monday about the yen?
Yes, I do. And here's a reason why. And I'm not saying it can't go up, because it can. You know, we get
Right.
we get a trade deals done, whatever that means, depending on like the nature of it. You know, what tariffs are dropped, what tariffs stay in place. What amounts of um, you know products are being bought by China, et cetera, et cetera. That's going to depend on where the dollar yen goes.
Well, it sure isn't doing much compared to what the S&Ps did in the last 3 trading days.
Well, that's the point I want to make is, let's say, and I was actually watching this morning. Citi did a. Oh, I'm sorry.
That's okay, bro.
Excuse me. I'm a little
And you're
tired
getting this
morning.
extra hour of sleep. There's no excuse.
I'm trying, but unfortunately.
Oh yeah, I saw you've been waking up earlier than before the time change.
Yeah,
Yesterday.
Yeah, yesterday it was, and then anyway, it's whatever it is. Like last night I went to bed a little late. So anyway, the Citigroup did a video. They are a video analysis of 126 different institutions and banks, and looking
like a survey. You mean?
It's a survey, yeah. And
okay.
The survey was basically, what their conclusion was is that most of everything that we could possibly get is priced into the market. So this is the time that you want to own tail risk hedge.
Okay.
So, let's say a trade deal gets done, which is the assumption. That's the running assumption. Trade deal gets done. Again, the specifics of the trade deal is going to be the most important part of an announcement being a trade deal. Whether we get a pop on the news, sell on the news, pop, then drop, or whether we get a pop and we get a continuation. Regardless, when an announcement comes out, and I should say, if an announcement comes out, the first thing that's going to happen is stocks are going to rally to new highs. Dollar yen's probably going to pop to 109, 109.30. Who knows? It's going to go up. But the nature of the deal will dictate whether we do a buy the rumor, sell the news, or maybe we just go down immediately, because we could have a trade deal and then no tariffs are being removed, and the market would probably sink on that. But there's things from, is there going to be a cap on the US dollar CNH, to what tariffs are being removed, what ones are being added, are there stipulations? There's a lot of different things that can drive price. But the question I ask is, what if we just don't get a trade deal?
Yeah.
And if we don't get a trade deal, you have to have some sort of hedge risk, out there. And that's why the dollar yen, in my opinion, is the choice. Now you could look at other, yen pairs too, whether it's the Aussie yen or the Euro yen, or, what have you. I'm just happen to be shorting the dollar yen. Because it, like you pointed out, it is not going up with risk. And if you take, let's take the S&P, and let's pull up the index that I've been drawing on the last couple of days. This is the actual S&P index, right? And let me just, and by the way, we hit the 161% extension yesterday. We're going to be up there this morning. This morning, we're going to be arguably 8 points higher than where we're at. So 22 will be at, let's say, roughly around, 30, about where my cursor is right now. That's where we should be if we just open right at this point in time. And let's go ahead and compare that to the dollar yen. And you can see that we've seen this really stark divergence. Let me grab a pen here. Annotate. Let's go to draw pen. Okay, so we have the S&P that continues to, drive higher, right? The dollar yen, you know, is moving lower. Well, and right now you got this big inverted head and shoulder pattern, right? This is like the big inverted head and shoulder pattern everybody's looking at. So, if we explode higher, the dollar yen should explode higher, realistically. Let's see here. But the question is if we don't get a trade deal and the stock market just does this, then where does the dollar yen go? My opinion is it does that. It's going to
Blake,
really.
do you think that the meeting between Powell and Trump was perhaps an indication towards that direction?
No. I mean, that was the speculation at first. Was and my comment in the chat room yesterday was, what if Trump called Powell in and say, hey, listen, this deal is probably not going to happen. We're going to have to, you're going to have to actually really think about, moving rates lower if this trade deal doesn't happen this year. And, and Powell did say yesterday that his actions will be dictated by data as it comes out, not anything else. So did Trump, call him in to maybe give him a little heads up? I don't know. I mean, you can speculate about that all you want. Eunice Yoon, she tweeted, I think we were on the webinar yesterday when she tweeted yesterday.
Yeah, we were.
That China's getting a little tired and they're thinking about prolonging. I mean, whether that's true or not is to be seen, but at this point, till we get actual confirmation from either Trump, Lighthizer, Lee, the China trade representative, or Xi, the president of China, till we get an actual word, the market's just grinding higher, and it's going to continue to grind higher because it's looking at, this is a, glasses half full type of situation. I don't want to miss the stock market rally. This is FOMO at its finest, and and it's going to continue higher. So going back to your question is, what was the meeting between Trump and Powell yesterday? I mean, I don't know, but I would assume it was more, why aren't you moving rates lower? Everybody else is moving rates lower. Why don't you move rates lower as well? And Powell's probably like, I'm gonna move rates lower if and do more if the data dictates. So I'm sure it was Trump just trying to, strong arm him a little bit, into the into the end of the year.
Blake, did you say that some people are saying that the meeting happened because Trump wants to know if the Fed has his back if he raises tariffs or the trade deal doesn't work out?
Yeah, I think that's a reasonable speculation, but it's only speculation. We don't know. I mean,
I know.
It
sounds too rational for President Trump to have a meeting like that.
Well, no, not necessarily. If he knows that, hey, listen, we got to get ahead of this. We have to get ahead of, like, it doesn't look like China's going to do anything, and we got to think about, digging in our heels. We're going to have to see how do we support the economy and how do we support the stock market. Maybe we're going to have to, you're going to have to start thinking about rates being lower or more quantitative easing. What are options available to the Fed if indeed
they must have agreed to something, because the president actually said the meeting went well. He didn't insult him for the first time since he's been Fed president, so they must have come to some understanding.
Or maybe there was the Fed Chairman Powell said, thank you very much for all the information, and I'm going to take that into consideration moving forward. And here are the tools that we have ready to combat any negative forces that we see in the economy.
I mean, he didn't come out and say, now that Mario Draghi is retired, we'd like to have Draghi run our Fed. right?
Yeah, I mean, I think he did say maybe we should have Draghi run the Fed instead of Powell. I think he did say something like that. But anyway, but let's just all understand that the stock market continues to move higher. There's no reason to stand in the way of the stock market. You can say, on every level or every indicator, it's overbought. Yeah, it's overbought. Let's see some lower lows before you start drumming up the conclusion. I was talking to the guys in my office yesterday about midday, and they were like, "Hey Blake, that candlestick chart you saw about the gap higher on Friday, does that invalidate?" I'm like, "Yeah, it is, because we didn't gap lower. Well, I mean, we gapped slightly lower, but we just ended up moving higher." And this was midday yesterday, so I'm like, yeah, we gapped higher on Friday.
Monday.
Oh
Oh yeah,
no,
yeah.
it's
You were
Friday.
looking for an island.
Yeah. I was thinking, hey, if we get some sort of bad news, it was going to be an island reversal, but it ended up not being. Come on, charts.
Maybe this will be an island. That's a hell of a gap in this. SPX Corp.
Oh wait, I'm looking at the wrong chart. I'm just
Yeah.
like, what? Sorry, that was my bad. Here we go.
Oh,
So
no.
we were trading yesterday. We were trading around it's 31.15. I'm like, nah, it's negated, because we're not gonna, even if we moved lower yesterday, it wouldn't have been an island top. We'd had to gap lower towards 3100 and move lower. So I'm like, no, because the guys in my office, I may be shorting the dollar yen, but the guys in my office are playing long risk. And they happen to be long equities in the face of the wall of worry type of situation, and they've been long for the last 2 weeks. So they've been buying S&P futures as they've been picking out here. So they're more concerned on hey, do I see anything that alarms them? And my comments and my 2 cents to them is, yeah, just this yen is underperforming, but I think it's just it's an easy hedge for risk right now. But anyway, guys, I'm going to have to turn it over to you. My office is actually pinging me right now. Steve, can you take over here?
Absolutely, mate.
All
Yes.
right. And hey, I want to thank everybody for being with us as always. I got to roll out of here, but I'm going to pass it over to you, Steve.
Thank you, mate.
Thank you.
Thanks, guys.
Thanks,
Thanks,
see you,
Dale.
Blake.
Thanks, Delios.
Hello, Steve
Hi.
and Dale.
Hello, Stell and Steve.
Everything okay?
Yeah.
Okay.
Everything fine.
It's been a particularly quiet morning today. So
Indeed,
quiet that
it
we've
is.
been telling jokes in the chat room, but that's a different thing. Just a couple of things I can mention. We had the RBA minutes from the previous meeting where they held, and going into the meeting, the probability of a cut was tiny. It was like less than 10%, and as it turns out from the minutes, they were actually much closer to cutting than we thought. They said that they did discuss quite strongly the possibility of further easing, but they decided to stay in a wait and see mode until there is some kind of progress in the US-China talks. We all know how dependent on China Australia is. So that was a little bit surprising. Having said that, the Aussie is actually rallying against the dollar, so it's not doing much on the back of it. But I thought it was a little bit surprising, given that there was very little priced in for them last meeting. So that's one thing to note. What else? We have some US data in about 5 minutes, housing data. Apart from that, it's been extremely
housing
quiet.
data, building permits,
Yes.
housing starts, and Canadian manufacturing sales. That's what we have upcoming.
Yeah.
Gold silver ratio is kind of it's a pretty interesting day with silver up 10 cents and gold down $1.50 or so. So gold silver ratio looks like it's on its way down to new lows here. Steve, what do you think? And how about you, silver, Stell?
I love it.
Yeah. Okay. So silver, it's a one to be long still. don't you think?
We're gonna know quite soon about silver because we drew that a long time ago. So
Yeah.
so far it has manifested perfectly. Now the question is, we got the first leg down, correctly. The question here is this the pivot from which we actually continue higher? Because I want to be open-minded. I mean, I'm really bullish the metals in the medium to long term. There's no question about it. But I want to be open-minded. So the question is here.
Well, the
Are-
gold silver ratio is really not a directional indicator.
are
It's
we
just
sure that this is not
right.
a flag? No, this is silver. So
Right.
is is this a flag? Because if this is a bear flag, then we can see more weakness. For example, towards
Right.
the 61.8 before we see like a big recovery.
But gold could be weaker during that decline, and the gold silver ratio could still continue to decline.
Yes, gold.
Right.
Gold in essence, didn't have that of that much of an impressive acceleration higher as silver did, but on
Right.
the other hand, it has had a much more orderly corrective move lower, right? I mean, we see that it has comfortably stayed within the confines of this larger pennant. So as we've said, 1480, 1485, that zone here is quite an important one. I'm pretty confident that once we bridge through that, then it's probably going to be moving likely the 61.8% PIB, the long term, move to all-time highs, which is at 1586. So I still remain very positive, but as I said, there is still the possibility for a lower low for both the metals before that actually happens. Okay, so everybody have to be cognizant about that. Speaking of the metals, platinum had a nice recovery also from a key support area, but still remains.
Steve, we're kind of losing you a little bit from your mic. I don't know if you're moving away from it or whatever, but your voice goes up and down a little bit.
Okay. That's okay, Stelios. I'll fix it right now.
If you can do it so that we don't hear you at all.
I was playing around with mic sensitivity. Tell me if it's now fixed.
Yeah, it sounds better already. Yeah.
Okay, so
Thanks.
tell me if it happens again, because I was toying around with mic sensitivity before, so that would definitely explain it. Okay.
Okay, thank you.
So just let me know if it happens again, and I'll adjust it further.
Yep.
So I said this is quite a nice recovery from a key area in platinum, but keep in mind, and this is something like a barometer in my mind about the metals starting the next leg higher, because we've had this prolonged downtrend in platinum. I mean, platinum has been underperforming the rest of the metals for a long period of time and is still being capped by this long-term descending trendline resistance. So, for me, another indication for, getting more bullish and pressing on with metals is going to be getting, a convincing breakout from this descending trend line. That is the most, that is mostly why I'm also monitoring platinum. And speaking about the rest of the metals, one more comment here. I like how palladium dumped lower once it broke through this long-term ascending channel. There is no question that it remains bullish. I mean, we're still above 1615, and as long as we are above 1615, we have to be looking higher. But I consider it quite a high probability scenario that this might be a short-term recovery before we get one more leg lower, before we see a continuation to the upside. By the way, data coming up right now, so let me pull this here. Any second now we should have them. $13.20. Stelio, is it just my?
We're losing you now.
No, I stopped speaking.
Okay, yeah.
Is it just my data flash not populating here?
I don't actually have data flash open on mine, but their numbers are out on investing.com. So let me check my data flash. Hold on.
Perhaps because
open. Okay. Nope, it's not on mine either. So there's something wrong with the data flash.
Yes, some first time I see that something got stuck here. Okay. So tell us the numbers, Stelio.
So the numbers: building permits better than expected. Housing starts slightly worse, but overall they're better. So should be a little bit dollar positive. So building permits are like 100,000 more.
Yeah, actually building permits quite a lot better. 1461 versus 1385. It just populated. Something got stuck obviously with it. Housing starts 3.8. Canadian manufacturing sales month on month was minus 0.2, but still much better than initially expected because the expectations were for a minus 0.6% there. Let's have a look what is happening with the USD Canada. Yeah, okay.
I don't see anything happening.
Yeah, not really anything moving the needle here. Yeah, that's actually
the data was better than expected, but really not market moving stuff.
Yes, indeed, data was better than expected, but also the fact remains that data were not positive, right? I mean, still we have a negative print here. So I guess that even by being better, that's not like the best piece of news for the market. But anyhow, yes, indeed, it doesn't seem to be responding. And as I've said, as long as we stay below 133.50, which is like a very key area of resistance, I would be very hesitant in being long the USD CAD. On the other hand, though, we got a nice rebound yesterday from the USD NOK, which today we seem to be paring back yesterday's gains, and we still have this likely active scenario here with a head and shoulders formation. So I'm closely monitoring this because a break below 907, I think, is going to be a nice trading opportunity for a move towards 892. Now, Coach, you mentioned earlier crude, and crude indeed got rejected from that resistance area. For me, it's more important, actually, it is quite an important move because I like the fact that on Friday, it head faked people that, it's actually going to move higher because it finally managed to close above that confluence of the 200 daily moving average and the 50% fib. And that was it. I mean, Monday we gave back all the gains. And so far today we're moving lower and we're now approaching this channel's support. We also have the 50 DMA a little bit lower at 55.75. So I think that like a move below that level should bring us down towards 50 and a half, 51. I think that's going to be quite a decent trading opportunity. So I'm still keeping my eyes focused on that. Now, USD SEK is also one of the pairs that I'm closely monitoring because we had a perfect rebound from this long-term ascending wedge, rebound which failed, and we're once again getting quite close to this major trend line support. So, this is something, I mean, we know how highly correlated, it's also inversely correlated with the Euro USD. So for me, a breakdown in the USD SEK is going to be somewhat, let's say, of a leading indicator of what might follow with the Euro USD as well, or also with the USD Swiss. USD Swiss, speaking of which, let me pull it up. USD Swiss has been rather recovering, but that's mainly due to the fact that we've had quite a decent 3-day rally from the Euro Swiss. Of course, we know likely who's behind that. I mean, we know. I mean, the SNB is one of the central banks that are, actively admitting to, um, manipulating the currency by, especially against the euro, by selling Swiss francs and buying euros. So I'm pretty sure they didn't like that recent move to the downside, and they got it supported here. Regardless, I mean, we still remain in a well-defined downtrend since retesting the 120 level, which was previously the S&P floor, as resistance. So this little rebound in the Euro Swiss has helped USD Swiss stay away from a breakdown, which, as I've said multiple times, the key level here is 98.40. I think a move below 98.40 should accelerate the losses from that point on, and I'm assuming that it shouldn't take much time after that to get a move down back to 96.60, the previous low. So I'm still I'm still bearish in the sense that I favor the downside, but admittedly, since we've been trapped in this range for quite some time now, between parity and 98.40, there is no real reason for somebody to position, while we are oscillating in this range, because who knows? I mean, we might stay even longer trapped in here. Now, having to do with the euro pound, a small rebound today for me, that doesn't, really change much.
Yeah, with the Swiss, Steve, I'm afraid of getting gnomed.
Yeah,
You
but
ever been gnomed or gnomed? Is it a silent G? The gnomes in Switzerland? Yeah, silent. Okay.
so
And what does it mean anyway? What's a gnome?
I don't know, man.
Oh, really? You don't know?
uh,
Yeah, you're
Well,
on a big desk and everything. You
I
probably
can
dealt with gnomes.
I can tell you what a gnome is in World of Warcraft for those that are older time gamers, as I used to
Oh,
be in my student years.
okay.
But that
What is,
probably doesn't help that much.
what is it in your gamer things? What was it?
It was one of the races, like very short little um, humanoids, like shorter even than dwarfs.
Okay, so that's okay. So now I know who they have in the vaults,
Yeah,
watching over all the gold and everything
exactly.
that the Nazis parked there in World War II. Okay, thank you,
Um,
Steve.
So now, having to do with, let me check the questions, by the way, like Santa's helpers, but green colored theme, says Dominic. Yeah, the small sculptures they put in gardens. Yeah, those little like humanoids, exactly. Use the yen forming a triangle, says Forex Gal. Let's go to the USD yen. So, this is still, I mean, this is still a trapped market here, right? We still have the potential of this inverted head and shoulders formation, although I have to admit that we haven't lost symmetry yet, which is good if you want to be bullish. But if it starts taking longer, we're going to end up losing symmetry. So that is something that I'm paying attention to. If this wants to make a move, I think it should do it like within like a week or so. And 109.50 is going to be the defining resistance level. Now, on the other hand, we're still capped to the downside from like 108. So, between 108, 109.50, I consider everything in between to be purely noise. I think not worth positioning here unless you see a breakout. At least, that's the way I'm approaching this. I don't want to be chopped around within this range. Of course, if I was a scalper, I would be looking at those markets with a totally different set of eyes. And of course, my main tool would be, for example, a 1 hour chart, a 30-minute chart, like a 1 or 2 hour chart or whatever. I mean, the lowest time frame I'm looking for trading is this one, 4-hour time frame. I never look lower than 4 hours because for my type of trading, it's completely worthless to look anything below like 4-hour chart. Gold and silver, probably you came in late because I did cover both gold. Actually, I covered all the metal complex: gold, silver, platinum, palladium. The only thing I didn't cover is copper, which I'm going to do now. Actually, there's no real comment here. I'm just going to briefly say it again. Gold still consolidating in a wedge. Silver has found nice support here, but it remains to be seen if the rebound is a bear flag or not. Good thing though that it has, responded from an important area. Now, having to do with copper, copper is actually, I was looking at it earlier, copper is having quite a nice day here. And I remind you that this can be viewed as a descending wedge here. So, I do see the possibility of a bullish case scenario as long as we stay above like 256. And today is quite a good day. Speaking of which, because we know there is a correlation, it used to be even stronger. Today, both the Aussie, which has already, the daily candle in the Aussie as we speak is an outside white candle, which is quite a bullish candle. Add to that the fact that it responded perfectly from the 61.8% fib. So, that's quite a positive day. But most importantly, because the Aussie is still some distance away from this triple confluence of resistances at 69.30, which is going to be like, super crucial for changing, in essence, the downtrend to something different. But what is key here is the Kiwi, because the Kiwi is once again, for the third time, 3 days the first time, another 4 days the second time, and this is the third time, and we are on the first day. It's retesting this confluence of resistances at 64.30. It's a horizontal support resistance area. It's a 38.2% fib, and probably most importantly, it is the neckline of this inverted head and shoulders formation. So I have to say that a daily close above 64.30 is going to be a very appealing trading opportunity. What do you think, Coach,
Steve,
about
I
it?
remember you talking about it when it was forming that right shoulder, that it was good or bad from there.
Yeah,
And you had a pretty good risk reward buying it before you had a breakout.
yeah.
That was a great call.
People that were more aggressive could actually buy it here and have a stop loss below this ascending trend line, which if we broke below it, that would have been an indication that probably this was a corrective
No
move
shoulder.
that had already been completed. So Kiwi back at a very key level.
Looks good.
And looks good. Yes, it looks very good. It's very well formulated. I've always seen multiple times in the past this phenomenon when the head of a head and shoulders formation is a head and shoulders formation itself. So this is not the first time.
There's that self-portrait. Yeah.
Yeah.
All right.
So, and keep in mind that the target of this formation is at 66.50. So it's like more than 200 pips of upside from there. So I think quite a decent opportunity, because if you want to play the breakout, I mean, let's do some measuring here. You're going to have something like, your stop loss should be below the lows of this shoulder, which is going to be like risking 1.8% roughly
Yeah.
to make 3.5%. So
3 to 1. Yeah.
so it's a perfect. Actually, it's more of a 2 to 1.
Okay.
1.8 to 3.52. Yeah. So it's
But
a
for
very
go
healthy
ahead.
risk reward ratio, right?
Yeah, so from a trading perspective, and these patterns always repeat, and there'll be another one of these. What you can do is initially probe the position while it's developing a right shoulder. And then instead of selling it up here because you have gains, this would be an add-on. So, people are always used to adding on to when they're in a drawdown, not as used to adding on when they have, 50, 100 pips from the low or so.
You're absolutely right. And the tactic, for example, in this case would be put 1/3 of a position there with quite a tight stop loss.
Right.
Then put another third of a position on a breakout, and
Yeah.
then add another third of a position once you get some type of an acceleration and confirmation. So bottom line, if you acted like this, you would end up, let's say, having a cost average perhaps even slightly below the neckline,
And that's
and
where your stop would be.
and a very healthy risk reward ratio
Yeah.
following that, right?
Yeah. Yeah. Great teaching example there.
So that's why I wanted actually to show the copper, Aussie, and Kiwi, because they are somewhat correlated. We see that all three of them are doing well today. SPY, a big head and shoulder upside. The head
What's that mean?
is December 18. Okay, let's see what you're looking at. So December 2018. Oh, you mean,
Oh,
yeah, I understand.
that's the
This,
head. Yeah. I don't know.
no, for many reasons, no. Reason number one, no
Look at
symmetry
the
here.
neckline. And it,
Yeah,
if you called that a neckline, it made a few trips back and forth above it.
no, I think what he sees as a neckline, which isn't, whoop, that's not what I wanted to do. Let me fix this first. I think what he sees as a neckline is
That. Yeah. And see how it made a trip above it, a trip beneath it.
this one, which, as you see,
Oh, that's a wedge line. Could that be a
yeah,
neckline?
yeah, this is what he sees as a
Okay.
neckline. Yes.
Okay.
Which, to be honest, it wasn't invalidated. I mean, we
Yeah.
respected it multiple times. So I do understand, where you're coming from. But first of all, head and shoulders formation as continuation formations are less reliable. That's point number one. Point number two, not such a good symmetry between the two shoulders. So I would be quite hesitant looking at it this way. But it's not. I mean, your interpretation, it's not like technically wrong. I mean, yes, okay, it can be. It can be. When we're gonna find out about this potential interpretation? I think that very, very soon we're going to have a pullback, because we're extremely overdone in the short term. So if this pullback actually stalls at that
55.
trend line,
Yeah.
then yes, and we bounce from there, then that increases, let's say, the likelihood that this is the interpretation. Now, if you see, though, a deeper correction than that, that more or less invalidates that point of view. That would point to 4,000. Nothing is unlikely with these markets. But needless to say that a move towards 4,000 would most likely imply bull market continuing for at least another couple of years, even if you look at that from a perspective of presidential cycle, adding to that the fact that we are in a like 10, 11 year recovery, I think it's a very, very low probability scenario to see 4,000 in the S&P before we get a bear market. So are we going to see 4,000 in the S&P at some point in our lifetimes? Extremely likely. Is it going to be during this business cycle? In my opinion, the answer is extremely unlikely. Okay. And the reason I believe that we are going to end up seeing 4,000, and the reason why I believe that stock markets in general, with like big moves lower on occasion, are going to continue higher, is one and very simple, and it is inflation, right?
Right.
So stock markets have an ascending bias by default due to inflation.
Great point.
By the way, Coach, I haven't asked you, do we have a guest today?
I got a cancellation this morning, which is
Okay.
better than how most people cancel.
Which is like 5 minutes before or
Yeah.
whatever, right?
Well, some people don't even tell me.
No,
So he
yeah.
was polite. He didn't give me a lot of notice to find a substitute. But anyway, we have options Mike tomorrow, and then one of my favorites, Raghi Horner, is going to be with us on Thursday. She's great.
Okay. What's
But
her
nothing
specialty?
today. And the Raghi Horner?
Yeah.
Oh, she's pretty close with those guys in at Forest Park. She's down there in Florida, and she was one of the, one pioneer female FX traders. Around the same time frame that Kathy Lean broke in and stuff like that. So Raghi Horner has a pretty good long-term reputation as a trader.
Okay, perfect. That sounds so mostly FX trading, right?
Yeah, and she was long Bitcoin for the big move the last time I interviewed her. It's been a while, but she'll have some good stuff.
Okay, that sounds actually good.
For our investing.com Thursday.
Looking at USD yen stock news and reaction today, intraday reversal of SPX EU stocks 50 oil channel break signals from rate markets, shallower curve despite higher short rates. Feels like a reversal in SPX for a 3 to 5% pullback imminent. Would you agree, Steve? Yes, I would. I would. I think that the S&P has to take a breather, and I think it's going to be rather soon that's going to happen. So yes, I do agree.
It's going to be today. It was my turnaround Tuesday call. I'm up 1.5 handles so far.
Be careful.
I better take it. Take profits. Huh?
Be careful, Coach, because you're going to be accused as a broken clock.
I am. Well, okay. Well, then I'm due to be right because it's now on where the clock stopped. 1982.
Okay, so I think we covered quite a lot of markets. We don't have an interview, so last chance for anybody here. If you have any question for a market we haven't covered, this is your chance. Going once.
Where we're at.
Going twice.
This is an auction.
Who's the lucky winner?
Anyone out there have a question? Okay, everyone knows what everything's going to do.
For Aussie USD. Come on. We covered that explicitly,
right.
But okay, yeah, we
go ahead.
No, the fair thing is that we focused more on the
Kiwi.
On the Kiwi. So as I said here in the Aussie, good sign is the fact that we, to the pip, stopped at the 61.8% fib. But in order for me to turn bullish the Aussie, I have to see a breakout from 64.30. This is like a triple confluence of resistances. Every single one of these resistances is very important. One of them is the 200 DMA. The other one is the 61.8% fib of this move lower. And the other one is this descending channel resistance. And this descending channel dates back a year exactly. So not only a triple confluence of resistances, but every single one of these resistances is an important resistance. So
Tom, I want to answer this, and Blake says this a lot. Just because you're not ready to get long something does not mean it's a short. Just like just because you're not ready to short something doesn't mean it's a buy.
Yes, exactly.
Capiche?
Exactly. That's why you often see in my charts.
I used to do that, Steve, and they're not high probability trades. I would go, well, I'm looking to sell, let's say, I'm looking to sell oil at 57 and it's at 56.23. So I would go, well, if I think I could sell it at 57, why don't I just buy it here? That's 80 points. Because that wasn't the trade. The trade was to sell at 57. Doesn't mean it's going to get there. But you know how many times I did that in my career? Why just watch it? I know I'm going to be able to sell it up there. I may as well, trade that too.
Yeah.
Don't do that.
And there are key areas in the charts for me, and that's why many times you see this type of a mark on my chart. And as you see, they very frequently work. So this thing here, I drew that when we were actually testing that area because I knew that that was a key resistance. So shorting it up there, yes, was a viable trade. Now, being here in the middle of this descending channel, shorting it or being long doesn't make much sense. Jason is asking a valid question. Steve, a few weeks ago, you talked about the issues with the US economy and the dollar. Yes, I stand by them. So in your view, why would you call for SPY 4000? Jason, you didn't probably pay attention to what I said. I said that I think that eventually in our lifetimes, we're going to see 4,000 in the SPY. And the main reason is going to be further debasement of the US dollar. So the reason why I think that we will eventually, but as I said, not during this business cycle, okay? Not during this business cycle. Eventually we're going to see 4,000 is because the value of the dollar is not going to be what the value of the dollar is today.
Yeah, I mean, if they want an example of how that could happen, all they have to do is look at Brazil when they were going through their currency crisis, and
yes,
and
the Brazilian stock market. Yeah,
the
exactly.
Bovespa was a moonshot while their currency was crashing.
Yeah, the Bovespa was a moonshot, literally. I mean, if you saw the chart and you didn't know what market that was, you would be like, "Oh my God, this is like a parabolic uptrend."
What a strong economy, you would think.
Yeah, and then when you realized that if you wanted to cash out from that, all your gains would have been lost from the devaluation of the currency, you realized that the only reason the market was rallying is because the currency was being debased, and that is why I believe that at some point we're also going to see S&P 4,000. But when we see S&P 4,000, the dollar is not going to be what the dollar is worth today, as the dollar is not worth today what it was worth in the 80s, as the dollar was not worth in the 80s what it was worth in the 70s.
Yeah, so we'll have a SPY 4,000 and a loaf of bread $10.
Yeah.
Okay, so anyway, I think you've covered everything.
No, we have actually two more questions.
Oh,
I've covered copper, and we also have a question for Euro Kiwi, so I will be more than happy to show that.
Ziggy, yes, we'll be alive for SPY 4,000, me and you.
Ziggy, I think you will be alive for SPY 4,000, but I don't know if it's going to be something that you will be able to celebrate as a US citizen.
Well, we'll be playing checkers and with a shot of tequila, Zig. All right, from our, we'll walk over to the table in our walkers and talk about. Did you see the S&P today? It's at 4,000. 4,000. What's that? We won't even know.
Thanks for clarifying. So in your view, with the dollar this strong, why are markets at all-time highs if the US economy is so bad? For mainly two reasons. Reason number one is that we have major bubbles due to monetary policy, and capital doesn't have anywhere else to go, because at least the US economy until recently had 0 to slightly positive real rates. Not anymore. Keep in mind, guys and girls, that the US economy is back again to negative rates, real rates, right? Real
Yeah.
rate is the nominal rate minus the inflation. Now, I'm not going to even go through the conversation again of explaining to you how manipulated inflation numbers are, but even the official inflation number is
Yes,
2.
even with the manipulated number, it's
Yeah,
negative rates.
yeah, it's negative rates, right? But
Yeah.
still less negative than in other economies. So with so much quantitative easing, with rates being so negative that in essence penalize savings, which is devastating in the long term. I mean,
Financial repression.
yeah, I mean, as I have explained in the past, which is basic economics, which unfortunately proponents of the recent interpretation of Keynesian economics don't understand. Savings is the number one steam engine of any economy, because savings are the source of investment, and investment is the source of production, of growing in a healthy manner the economy. So when you penalize savings, in essence, you diminish the ability for further investment. So you diminish the ability for an economy to grow in a healthy manner. And I say in a healthy manner because you can grow an economy by being a productive economy, and you can grow an economy because you can persuade all citizens that it's a great thing going deeper and deeper into credit to be buying computers, cars, phones, roller skaters, you name it. Okay, but one is a sustainable economic growth, and the other one is a non-sustainable economic growth. That's the big difference between the two.
I'm very unpatriotic. I'm not spending a lot at the stores. So anyway, more than I used to. Anyway, so Steve,
We also
is
have
that-
a question
oh,
about
okay.
natural gas, so I'm more than happy to see that. Last time
Okay.
we checked that, I indicated that we were exactly at resistance because we had an equality of legs higher. As you see, we stalled exactly there. Now then, I assumed back then that we might have a rebound from this horizontal support resistance area, but we seem to be breaking below it. Keep in mind, though, that we have this confluence of the 50 and the 200 DMA just a little bit lower. So we are about to find out if this corrective rebound, if this was a corrective rebound and it's over. The fact that it got rejected exactly at equality is definitely a bearish signal, right? But it remains to be seen if there is more upside here. So far, though, the chart and the rebound doesn't look that promising for more upside. What about creating a green economy by borrowing, not using savings? I don't know.
That's what they'll do. What
I don't-
about it? That
I don't-
if they're going to do that, that's what they'll do.
Creating a green
Sure.
economy by borrowing. First of all, how can you borrow if there are no savings, right? Because let's clarify, there is a huge difference between the two. There is borrowing. For every borrower, there needs to be a lender. So there needs to be saving for every person that wants to overconsume, because when you borrow, you want to overconsume. And that applies to individuals, companies, a whole economy. Okay. Somebody has had to underconsume, so create savings, right? Now, if you're talking about borrowing to build something productive, that's the good type of credit. If you're talking about borrowing to spend, that's the bad type of credit because it doesn't create an income, right? Now, the bigger conversation, which is about creating a green economy, being a pragmatist as a person, I can tell you two things. Do I believe that there is climate change due to human interference? Answer, yes, I do. Question number two, do I believe that it is sustainable to switch within like just a few years from the current model that we have to full green economy? No, I don't. So I believe that, you know, the viable path is something in between. Okay.
All right,
Now,
buddy.
if you're talking about printing money out of thin air to change the economy in any way, I can tell you as a fact that the damage you will end up doing is going to be greater than the benefit. So that's it, Coach. I think we
right.
covered quite a lot of stuff today.
You did, man. You get it. Is it cathartic for you? You got it all out of your system now? All right. So thank you, everyone. And good hunting the rest of the day. You know, if you haven't done it yet, consider joining, subscribing, and being part of our trading family. And with that, I'm going to say, yeah, well, you have to admit that what Steve explains is not only coming from his brain, but from his heart. So he's giving you his all.
Jason makes another comment here and says, which is an interesting, and I always like to talk about macro. Steve, thank you for your response. It's hard to understand how this can end if all this printing is not causing inflation. Now, this is also a common misconception, Jason. Money printing is inflation. The definition of inflation until a few years ago was the expansion of monetary supply. They later changed it. So first of all, we do have inflation. Now, the question obviously now that you have is, okay, why isn't this inflation get depicted in price increases? And the answer to that is the following. Partially it is. Keep here in mind that, as I've explained in the past, and I've also explained the mechanisms, the reported inflation is much lower than the actual inflation. So in a big part it is, but also big part of that inflation, especially the one, let's say, the US creates, is being exported to other countries because the US has a trade deficit. So in essence, it exports part of that inflation to other countries because in essence, you guys in the US, as many other developed countries, I mean, this is not the exception, but it's like an extreme example. You buy items by giving back IOUs, which is inflation, right? And the third reason is because inflation has gone mostly, not mostly, but at a big part to asset valuations, bonds, stocks, in some housing in some areas, art, precious items, you name it. Keep in mind that a healthy economy, and I said that I'm going to have this discussion at some point and show you charts, a healthy economy, oppositely from what they're trying to brainwash people, creates deflation. A healthy, productive economy has falling prices because technology keeps improving, the cost of producing keeps decreasing. So healthy economies, if left alone, have stable prices or even decreasing prices. Now, central bankers all over the world, because we have unsustainable debt, are trying to convince everybody that it's super important to have positive inflation because for some reason, if we don't, you know, the planet is going to stop spinning or something like that, which is, of course, like, as Trump would call it, fake news, right? I mean, it can't get faker news than that. Okay, Coach, thank you.
All right, Steve, and everyone, enjoy the rest of your day. Remember, trading is what we do. It's not who we are. Get out there and smell the roses too. And don't just count your pips, count your blessings. We'll see everyone tomorrow. We'll see if we get this short-term peak developing in S&Ps and get some type of two-way market again. Time will always tell, the tincture of time, everyone. You're welcome, Stavros. You're welcome, Dominic, everyone. Have a great day, and we'll see everyone tomorrow or in
Bye-bye,
the chat
Coach.
room. All right. Thanks, Steve. See you tomorrow or later, bro.